Yo, what's good, guys? Firstly, I just want to thank everyone that has subscribed to the channel. Much love to you guys, and I really do appreciate it. All right, so firstly, we're going to be looking into breaking down of the pairs. This is the series that we're talking about. The series is going to be an ongoing thing. We're going to be breaking down all the key pairs, the levels, but more importantly, I'm using that as a platform for you guys to understand how to translate where price could be going based on market maker behavior. All right, what's going on, guys? Okay, so I posted this video a little bit late, to be honest with you. Been caught up with this run with Ethereum. I hope you guys are enjoying that Ethereum stream and what have you. But I'm going to be doing the pairs. I've got to maintain the pairs, guys, because Forex is, there is some form of regulation behind the way price moves. And crypto itself, it's free for all. As I said before, crypto is the epitome of supply and demand. If guys don't want price to drop any lower, they won't allow it to drop any lower. If guys are optimistic about about a coin, they're going to make sure that they put their money in that coin. And social media does a fantastic job of promoting these coins. Look at Dogecoin, even Bitcoin itself. All the hype of Bitcoin is just sent it to the moon. But what we're going to be looking at is initially the setups for the start of the week. Now, I was going to post this video on Monday, at the end of Monday evening, start of Tuesday, but I've decided to put Tuesday, do it now, okay, so that you can see at least some of the moves happen, okay. So firstly, I'm going to look at Kiwi Yen. I've been talking about Kiwi Yen for quite some time, to be honest with you. And the reason being is because it's actually it's performing beautifully in terms of respecting the cycles, okay? And we're going to look at how it started off in the first instance, and then we're going to look at where it is now, all right? So you can see right now where Kiwi Yen is, but in the grand scheme of things, you'll notice what I'm talking about in a short second. Let me bring it up. Okay, so this is the peak formation. All right, so we had the W down here. I'm going to bring up a chart so that you guys can see the move for peak formation. Here we go. All right then. So this was the start of the move, this peak formation here. All right, this is where in line with its previous cycle. All right, because if we look at how it's behaved before this run up here, all right, we notice that it had gone one swing down, consolidated, two swings down, all right, consolidated, peak formation, change, all right. Now, as I've said to you in the lives before, all right, you're going to see price behave like this. It will do two cycles to the downside, all right, like this. Whoops. Yeah, two cycles to the downside, and then it will do one cycle to the upside. This pattern happens. So likewise, it will do two cycles to the upside, one cycle to the downside, all right. This has to happen because it's how they regulate the behavior of the market, because they can't allow price to just keep going up and up and up. The market makers then won't have anyone, falling for the traps, So we look at here. We've got the W formation down here, the 3 PFL, which is 3 days away from the peak formation low. All right, so we've got W down here. Let's get that drawn there. Done. Now, if you look at the other videos that I've posted about Kiwi Yen, I talk about this move here and understanding why they needed to shift the zone. Because remember, they've been dropping price. They've been building their longs at lower prices in anticipation to close them at a higher point. All right. They've made retail traders believe that there's a short market. All right. And it hasn't tested the 50-day yet. And then on the first test of the 50-day, all right, they convince all the traders out there that the short market is still in play. So they start building their shorts and getting them in good. And then if you look closely, you can see that, they're not, Price isn't going anywhere. Now, conventional practice will say that that means there's a battle between the buyers and the sellers. No, it's just the market makers don't really want to send price anywhere. They've got the money trapped down here. You know, there's no pressure from the bulls or the bears. That's just, I'm sorry, it's just a lie. You know, what's happening really in this zone right here is the market makers are containing the price. Why? Because they've got the liquidity trapped. They've got the short sellers trapped in this area. And then before you know it, they shift the zone, they come back, and then they make people believe that it's just a fake out. They slap price down here, trigger all the liquidity, and then they bring it back up. And I said on that video that my entry was on this candle here and rode it to the 200 day for a nice 35-40 pips profit. All right. Anyway, so that's discussed in that video in episode 5. All right. Now, what we said with Kiwi yen was we were going to go through level 1. So this was level 1. We discussed that in the video, level 1. And then we were waiting at the tip of from this point here. This was level 2. All right. And we were waiting for this level to be taken out. All right. And look how long it's taken. It's effectively taken nearly 2 sessions to break that level. All right. This isn't deemed as a break from the level because it's pulled back straight away. But what you can also see in this is you can also see effectively another small head and shoulders, if you can see that. A head and shoulders is just a variation of an M pattern. Okay, I mean, you can actually consider this as an M pattern also, you know. When it pulls, drops out of the zone, pulls back, continuation, drop. Okay, so stop, hunt, rise, and then drop, you know, shifts it out of the zone. But we're still in level 2. We are expecting still another move to the upside. And that's exactly what happened. This was Monday. All right. This was Monday, false move week beginning. Let me just pull up a critical thing here, because without it, you ain't going to understand it clearly. Here you go. So Monday week beginning, the real move, okay, it's the false move happens. All right. Look, they're rising the price, raising it, and then they do stop, hunt, high. They make the traders believe that they've broken out of the previous zone, previous level, all right? They've trapped the guys who think it's going to go long. They've taken out all their shorts. At the start of every London session, all right, you're going to see a stop hunt rise or a stop hunt low, all right? With the stop hunt rise, they send price up, take out the stops, and then they crash price down. This is Monday, the false move week beginning, all right? It's making traders believe that at the start of the session, they were going to go to the upside, all right? But then what they did was they laid their true hand with their true intention. We are expecting another move to the upside. Remember, if you look at this, all right, when you're considering a cycle, this is what you need to be looking for. We've got peak formation, okay? Move up, level 1, consolidation. So level 1 ends here, level 2 starts here. Move up. Level 2 in swing, level 2 stops, level 2 ends here, level 3 starts. Now level 3 is where the next level of formation is going to occur. Remember, market makers move in cycles. Usually what they do is they move every week. They can have a 2 to 5 day cycle. Okay, it depends. It's usually about 2 to 3 or 3 to 5. It depends on what the market maker's feeling at that point in time. But usually this is what happens. Level 1, level 2, level 3 will be a return to the upside, and then they start getting choppy in this area and then form the peak formation, and then it starts all over again. Okay? Sometimes what they can do as well, all right, is they can form the peak formation. Let me just close that. They can create the peak formation up here, the M, all right? And then they can bring price down, and then they could create a W formation and then continue to the upside. So it's all about being aware, and the way you would determine if this W formation was going to be valid, okay, was if the 50-day moving average was here, when it came back down and tested it, the 200-day was pointing here as well, and price looked like it was favoring more activity to the upside, all right? So that they can do this sort of behavior. I mean, look, they did it here. We're in level 1, Level 2 consolidation. They've done an M pattern up here, brought price down, whacked it back up. Okay. And then Tuesday session, they've dropped price all the way down to the 800 EMA in this area here. I mean, look at the activity there. Look at the green candlesticks there. Let me just put this here. Look at the activity from the market makers at this point here. Right, you can imagine how many people were looking at this thinking, okay, it's going short. If we break past the 800 EMA, okay, we're going to get our money in good and ride price all the way down because dollar yen has been rising, okay? They haven't finished the cycle yet, you know? They can't. They have to finish the cycle. It's in line with the ADR, okay? And also they have targets that they need to hit, all right? So if you pay close attention here, you can see they get notable volume is coming in below the whole number. I'm sorry, below the 800 EMA, all right? Now, when price takes out this level here, look, the range daily low again. You've got the range daily low coming into play. If anyone's been following the live streams on Ethereum, you'll have seen how the range daily low acts as an area of support, all right? So market makers take out that area there, make the guys believe that we're still continuing to the downside, all right? They grab their liquidity, then they move price up, and then they bring it back down again to fake out the players, and then they shift the zone. And this is exactly what they've done. They've shifted the zone and moved price. This would have been a stop hunt low, rise. So the stop hunt low usually starts at around 2/3, well, in the final third of the Asian session, all right? So I was looking at this and I was like, right, okay, this is where we are. It should test the initial range, initial low of the Asian range, all right? It will look at the range daily low, because if the range daily low is in sight, they're going to be taking it out at some point or testing it, all right? Because it's an area, it's a very focal area in the chart, all right? And my entry was on this green candle here. Before it was a green candle, I was entering, it was a grey candle here, all right? I entered on here because I knew we were expecting another move to the upside, okay? And from this behavior here, all right, it was showing me stopping volume. The pin bars were working the lows. They had found support at the range daily low, quick entry, close above the 800. And my profit target was effectively a close above the 200 and the 50, all right? But what happened was price was getting pretty, you know, it was showing great momentum and it had closed above the 5 and the 13 EMA. So an exit for me was a close below that. So I literally rode this all the way up to the range daily high and got out because I was trading effectively in line with the peak formation, but I know that things are going to change very soon. So I didn't want to get caught up in that. All right. I saw profit within 2 hours. Okay. So 1 candle, 2, 3, 4 is 1 hour. 1, 2, 3, 4. This is where I was asking myself, am I in profit after 2 hours from the entry of here? Yep, we're good. So we can let it play out. All right. My stop was below the range daily low, but it wasn't going to hit anyway because they had already saturated the shorts in this area here from the activity from the red candle and the blue candle and the green. All right. You see this blue little candle here? That there is stopping volume. That's stopping anyone from pushing price further down, because if they do, they're going to release all this money in this area here that they've been spending so much time trying to build. You know, guys are like, right, let's go short, let's go short, let's go short. You know, they've been taking their liquidity and then they smack them back up with the stops, you know. So in line with what we said about the levels, okay, we have got level 1 here, okay. So this is our first level right there. You've then got level 2, and level 2 was continuous, 2 sessions for level 2. Got level 2 here, level 2. It was just ranging out. We need a clear break of level 2, all right, to determine that we are in level 3. And that's exactly what has happened on Tuesday. Price has taken out level 2 and now it looks to be forming, all right, a peak formation. Now, if you pay close attention, you can see, right, you've got 3 pushes to the high, all right, these green candlesticks and another push up here. That's consistent with market maker behavior. So this is what's going to happen with this. Based on the way the cycles work in the FX markets, market makers will send price up now. All right, they've made the first leg. They're now going to take price down and test the 50-day, which is exactly what they are trying to do here. What could happen here is they could actually send it up, pull it down, pull it up, test the 50-day and make another attempt at the high before they make the move. All right, but we've exceeded the range daily high. We've come to a whole number. They work their shorts above key areas. Remember that? All right. And what's going to happen is we're going to expect, if this plays out exactly to the book, all right, and it doesn't do any wild behavior in the next few hours, this M formation, all right, will be fully developed and they will look to break out and send price down. And at least the first level will be achieved by taking out this area here. Okay, so we probably see this profit target in the first instance. You can see this green line, all right, that will be the profit target area for first level 1 from the peak formation of the M. All right, so what I'm going to do is I'm going to take a screenshot of that. All right, and when it comes to it, what we'll do is we'll talk about it and we can exchange the ideas behind what's going on, and so you guys can understand. All right, so I'll just save that. JPY level 3 formation. Okay, now let's close that. So that was Kiwi yen. All right, so you had so that was initially this red box here. All right, if I zoom out just so you guys can see, zoom out and you can see the red box. That's effectively what we were looking at here, and we expected the M formation. So we're expecting to go up, down, M formation, and that's exactly what it's done. It's gone to the side, but it's gone up, down, and then M formation, and that's exactly what we're waiting for to print out so we can move on to the next cycle. All right, now during the week there's 2 types of sessions you can have. You can have the Monday, the Tuesday sessions, and you also got Wednesday as the midweek reversal. All right, so we're going to look for a couple of pairs where we're anticipating a reversal on these pairs. Okay, so let me have a look on, I'll pull up I'll pull up dollar yen, because dollar yen, it actually didn't complete a cycle. All right, there was a reset. So dollar yen, we were looking at this here. All right, let me pull up dollar yen's before chart so that you guys can understand where I am talking about. Okay, right, we have got, all right then, so I'm going to bring up this chart like this just so you guys can see it easily. All right then, cool. All right, let me get rid of this. This is a pain. Get rid of that. You'll get access to these guys very shortly. Okay, all right then, cool. So this move here, when we first started this move, here's the image. All right, dollar yen. So this was the peak formation that we could see. All right, at the time dollar yen was 2 days away from its peak formation high, which was the high up here. All right, and we effectively were waiting for this W pattern to show confirmation and peak formation being locked. Okay, so this is what we anticipated. We anticipated this move. All right, and it's always good to project the moves, guys, because it allows you to see things in hindsight and then in foresight, and all you got to do is train your eyes to see this. Okay, so there was your W formation right there. I'm going to quickly draw it to scale here so you guys can understand it. Right, so you got W formation there. Okay, they shift the zone. All right, then, oh God, is that what that does? Okay then, forget that then. We'll delete that, do it like this. All right, so you get the idea. This is the peak formation here. It's going to be very brief with it. Okay, now you can see, if if you zoom in closer, all right, you can see that the market makers shifted the zone. All right, they locked the peak formation here, tested the lows twice, pins to the low, got short traders trapped on the pullback to the 50-day, move price up sideways. Okay, level 1 would be level 1. Okay, a clear break of level 1. That's what happened. Break there. Okay. Then we were anticipating a break to the upside for level 2, for level 3. But what happened is they aggressively broke out, okay, and reset the whole thing. They broke price up and then they pulled straight back. They didn't make any ground, and then now it's just faltered and just continued to the downside. So right now, dollar yen is in effectively no man's land. If you notice on the dashboard here, there's nothing happening in dollar yen right now. We're waiting for a cycle to form. We're waiting for a pattern to form. Okay, I mean, you can still trade dollar yen. You know, I traded dollar yen today, and I just took a quick scalp on a couple of entries, but I took the stop, hunt, rise and drop. Okay, so this is what I did. Took this move here. So I waited for this to form. So I knew it was going to pull away from the Asian zone about 25 50 pips. And it pulled out, okay. It pulled out from down here. It pulled out 15 pips. Okay. So we were expecting a 25 to 50 pip move. All right. But the stop hunt low really started from here. All right. So it came down. All right. Found support at the psychological support. And then it moved price up aggressively at the London Open, all right? And then trailed sideways. My entry was here short. Took it down to the psychological level down here, and yesterday's low, all right? That's where that area of profit target was, and then left money on the table there. Knew there was going to be a reversal in the New York session, but because dollar yen is not really anywhere with the way it's behaving. All right, I just didn't want to spend any time trading it, so I just took a few scalps and that was it. You know, it was too much of a. I didn't want to play around with the game that dollar yen was playing. You know, I wasn't in the mood for it at all. So we're gonna wait for dollar yen to do some normal behavior. All right, I'm gonna now look at the other pairs. Okay, so let's look at Euro Aussie. So. Euro Aussie, Euro UD, where you at? Okay, so I think I looked at Euro Aussie a little bit too late. Did it do it on Thursday? So I think no, that's an old chart. Bear with me. So the 20th of Jan, yeah, it's an old chart, but we can still talk about it to demonstrate the cycle as such. All right. So we took Euro AUD, Euro Aussie, did the peak formation. We expected it to go up, okay, from that peak formation, which is what we're going to look at here. Let me get it up on this chart here, because it's going to make life a lot easier for us if we do it like that. Okay then. Forgive me a second, guys. Just want to get this stuff in order. Here we go. Where are you? There we go. Okay, so that's where we had placed. Okay, so this is where our projection was. All right, we saw the W formation here. All right, came down, came back up, came down, up we went. Okay, that was the W. So if I bring up the next image again, you can see the W there. All right, so that's where we were last week on this move here. We drew from this peak here, we drew our first level as such, level 1. All right, and we anticipated a move to the upside, level 2, drop, M formation. All right, that's what we projected because it was in line with the nature of the cycle. We'd hit the peak formation, up we went, level 1, moved out of the zone, level 2, level 3 peak formation, and then it was looking to drop. And that exactly what happened here. So, level 1, pulled out level 1 here. All right, clear break, up it went, level 2. There's your brief consolidation, okay? Level 3, spike to the high. Now this level 3, okay, there's 3 variations to the levels, level 3 and peak formations, all right? You've got the M's, okay? You've got sort of like a Batman, half a Batman head, okay? And you've just got a simple spike, you know, like a V pattern, all right? Now this is consistent with a Batman head as such. So if I show you, this is what I mean about a Batman head, half a head. So you've got half a Batman head. So you've effectively got the ear and then price goes there. You can imagine that's the Batman head, yeah? So you've got half a Batman head. And that's what price did exactly, which then formed the peak formation for that session. All right. So it did that on the Friday. It set up traders on the Friday, okay, trapping them in that Euro AUD was going to continue to go to the upside. Okay. And then if we look, Monday session here, we're still waiting for Euro Aussie to break out. All right. We're expecting another move to the downside. All right, so the peak formation is here. It's come down, come back all the way back up. All right, and it's still not taken out level 1 of the formation. All right, so what we're looking for effectively is, you know it, rise, stop and rise, drop, up, peak formation. That's what we're waiting for with Aussie, Euro Aussie. All right. So, you know, do this, guys. Get your charts out and, you know, scale out the charts. Well, I'm going to give you the indicators. Don't worry. I'm going to get it over to you because you're all going to ask me questions on, you know, what is this? How do you know when this happens? I'm going to lay it all out on this video. This video that I'm doing is taking me forever, but it's going to be worth it. It's going to be a good 4 hours worth of content for you guys to understand how to utilize these indicators. All right. I'm going to look at we're going to look at Euro NZD, Euro Kiwi. So when I last spoke about Euro Kiwi, we said on the peak formation 2 PF, okay, price was down here. We got another W and it already shifted out of the zone. Okay, this was on the 21st of January. All right, so we're going to have a look if that played out. All right, so 2 peak formation. We have got 21st, there it was right there. Yeah, so here's your W, Euro NZD. Yeah, Euro NZD. Yeah, there we go. So we have got peak formation here. All right, consistent. This was only a small move, guys. All right, very small move, but it happened in line with the cycles. All right. You've got W formation, shift out the zone, level 1, level 2, then level 3 peak formation, down it went. All right. Did exactly what it needed to do. And this is exactly what we expected of the move. We expected it to move up from the peak formation W here. There's your W. All right, right there. Shift out the zone. Test the 200-day, pulls back. Forms another formation up here, level 1, breaks it. Now we'll look for a next level of consolidation, level 2. Then level 3 comes in. This was a very small level 2 to level 3 peak formation, guys. You know, do you understand? They can make, you know, variation on the theme. They'll change it up for you, you know, just to catch you out. Now we've got here, effectively, this is what's going on here now. We have got peak formation up here. Got effectively an M there, right? And then we got level 1, which comes all the way down to here in line with its ADR. Look how much it dropped 117 pips, and its ADR is 119. That's not by accident, guys. The market makers know exactly what their boundaries are. Okay, so they drop it all the way down. Stop hunt rise. We've established level 1 here. All right, so here's level 1. Now we need a clear break of level 1, okay, to form level 2. So what they do in the Monday session, Tuesday session, they've sent price all the way up here. Stop hunt rise, drop. Okay, they've started level 2. So now we're safe in level 2 zone. Now what we're waiting for is we're waiting for price to pull back. Okay. All right, so we've done level 2. We're now waiting for level 3. We're waiting for price to pull back, come back again, form level 3, and then go back to the upside. We're back in the cycle, guys. Yeah? So let's do a little bit more of an artistic approach to this. So, because I believe that if you see it like this, it's going to be act as an impression in your mind. You've got level 1, okay? Stop hunt rise. Level 2, okay? Stop hunt rise. Peak formation. Up we go. M formation. Up, down, up, down. The way you tweak this strategy, guys, all right? And understanding where, because what you don't want to do is make the mistake of thinking, oh, should I enter here? Should I enter here? Or don't try and dissect your entry. All right? There's no such thing as a perfect entry. I mean, look at this here. Do you think that's really a perfect M? It's never going to be a perfect M. When it is a perfect M, happy days. You know, that's sort of a perfect W as such. But you have to look at what's going on with price in relation to the formation. Look, it's dropping, it's dropping. Guys think they're going short. We're going to go back and test the 50-day. Always trade away on the first bounce of the 50-day. Well, that's your manipulation right there. They've trapped the traders in the belief that it's going to, continue to the downside. They did just that. Get the guys to go short. And then before you know it, they start keeping price in this zoned out area. All right? Accumulating contracts at the initial Asian low. And then they shift the zone out. They mess up all the guys who were short down here and here. They took out their stops. The cycles themselves, my friend. Okay, guys. All you need to do is just understand not about when they form, because it's the hardest thing to try and find. I'll be straight with you. Finding the cycles is the hardest thing. So always try and aim for the pattern. Try and search for the pattern. The pattern is going to be really important, all right? Because without the pattern, you're not going to know where you are in terms of a cycle, all right? I'm going to look at one more pair. We're going to look at GBP USD, all right? I'm going to look at cable. So this is what we discussed about cable last week. All right. It was on the 22nd. All right. So we'd hit a peak formation. All right. We had gone down. We were expecting a price to retrace back up and then continue to the downside. Okay. So let's have a look at what cable did do at that point then. All right then. GBP USD. Where are we at? Sorry about this. Here we go. All right then. Ha! What a move. What a move. Look at this. So let's bring this up now, okay? Peak formation, M pattern, shift the zone, level 1. Okay, so it's moved out, level 1. Found support at the 800, came back and tested the 50 and the 200, rejects the 200 day, okay? Comes back. We are now waiting for level 2, all right? So level 1, level 2, level 3 peak formation, all right? If I bring it like that, you'll see it clearly, but it's in line with our analysis. Level 1 drop, level 2 drop. So every time a level occurs, you're going to be seeing a stop hunt rise. Okay, when you're going short, you're going to see a level 1 drop, stop hunt rise, level 2 drop, stop hunt rise, level 3 peak formation, up it goes. All right. Let's bring back the chart. You've seen it, all right? We're expecting price to land down in this area here, in line with this cycle. Look, it touched it down, right down to the tip right there where I drew it by accident as such, okay? Because it was going to always take out from this peak formation, all right? It was always going to take out and form new cycles, all right? So again, going to draw it. Peak formation, right? Level 1. Stop hunt rise, level 2. Stop hunt rise, small one there, level 3. Peak formation. And then the rest is history, guys. Okay. You know. Now where we are with the pairs, we're starting off now. We're waiting for GBP USD. Whoa. GBP USD to effectively form its pattern. Okay. Is this going to be a level 1? Are we waiting for level 1 to consolidate? So stop hunt rise. Sorry, stop hunt low. Rise. Are we waiting for this pattern to occur? Well, let's see what happens, because we are at the midweek now. Okay, tomorrow is Wednesday. Are we going to see, you know, a reversal? Is it going to go to the downside? Who knows? Okay. See, when you see a false move, fast move like that, in line with what's happened previously, all right, you know, you're dealing with a little bit of an awkward situation. You know, there's no clear cycle yet. So I'm not going to be looking at GBP USD. You know, it's not really behaving for me. All right. And okay, I'm going to do one more thing for you guys. All right, did I speak about yes, I did. Euro and ZD, I've done that. I could look at, I did this for Euro USD. Okay, and we anticipated that Euro USD was going to go level 1 end, level 2 start, waiting for a spike to the high and drop, new formation. Okay, so I'm going to pull up the chart for Euro USD and see exactly what has happened there. Okay, so yeah, Euro USD is doing exactly the same thing, guys. There's actually no structure whatsoever with the pairs right now. Okay, so from where was we? Here we were. All right, we had actually, there you go. So this is what we did. We expected Euro USD. Okay, so if I just bring this chart here, so let's increase it. If you can see here, all right, this move here is here. Okay, now in line with the cycle itself, okay, we expected it to rise and then drop to form another peak formation, but that's not what happened, guys. It rose and continued to rise. Okay, continued to rise, and it formed a peak formation up here and then dropped. However, my dashboard, hold on, my dashboard is not showing me any signs of any formation being made. So like like Euro USD, sorry, like dollar yen and Euro USD there and Euro CAD, there's nothing for me to be paying attention to. Okay, so you can see we've got 0, 0, 0, okay, 0, 0. A lot of currency pairs have completed certain cycles. All right, so we're now waiting for those cycles to effectively turn to 1 to 2 days from the peak formation, and we would effectively trade the bounces from the 50-day and the 200-day. You know, sometimes we do catch the W patterns, sometimes we don't, but it's all down to really just focusing on understanding what is happening with price at that point in time.